Okay, so today is the weekend. Let's do a weekly recap of what happened. So first of all, let's get this up and running. Okay, so I'm just gonna put here. So 16th to the 20th of March, right? So what do we have? Let's do this. Trade days, Monday, Thursday. Euro dollar, Wednesday, Thursday. Bitcoin Friday, indices Monday or Tuesday and Friday. And then we've got the trade hours. These were the trade hours for Monday. You can just take a screenshot and see everything. Tuesday, Wednesday, Thursday, Friday. Okay, Friday, as you know, I don't work, so you don't always get a video. And I posted all of that on the 24th of February. Okay, so that's all good. We're up and running, and those are the trade days and trade hours. So with gold, now this we had Friday last week, so this week we had Monday, Thursday. So Monday I was long on gold. Okay, so I wanted to buy from here because that was a red bar where the breakout happened, so I wanted to do that, but that didn't work out. And I did say we need to kind of like break above that. It didn't break above that on Wednesday, so that's your Monday. It should have, so that would be that way here. Okay, now as you know, because my bias on gold is to the upside, so when we pull back into reasonable areas, if it's a trading day, trading hour, decent price, want to go long. And I did go long on a few occasions. The trade did get covered, but it didn't work out in terms of going to targets because it went the other way. Now, when I did the video on Wednesday, by the way, the videos for the week are now open to public on Vimeo, so you can watch it on Vimeo if you go to GlobalTrader.Club. I did say this closed below there, which is bearish. All right, so that's bearish. Okay, so I did say this is bearish and I don't like it because I want to go long. So it just panned down, as you can see. So nothing really to do here. Thursday there. So what I should have taken into account was the wick. Okay, and that's how it is. Where from? From that red bar onwards. Okay, that's how it is. And I should actually include that red bar as well, which is included here too. Okay, so that's how it panned out. So at the end of the day, a trade day, Monday coming all the way into Thursday in there, and Friday, as you can see, pretty much in the same place there. If you take a look at the trading hours, let's do that. Okay, with gold, that's Thursday. Let's take a look all the way from Monday. Now the trading hours, as you know, let's bring it back up, is UTC plus 3. Okay, if you're new to the channel, you need to make sure you get your hours right because they're UTC plus 3, they're my time zone. Okay, and all you have to do is just match it up to your time zone. So what I have here on Monday, this is Monday, so I will mark these in, and let's see, we had 6:35. Now, by the way, when you got the hours, you got to match it to a price. Okay, if it's not matching to a price, then you don't want to be there. So this is Monday, 6:35 bar, 6:30. This is a 15-minute chart. Then I've got 4:45 to 5 on a Monday. That's your 4:45. Let me show you. Okay, so that's your 4:45 to 5. You see the market selling off. And the next trading hours, 10 past 7 to 7:40, 10 past 7, 7:40, market going up. Then the next hours, I've got target at 10:45, and this is 9:45, 10:45. Okay, so why did I put 9:45 there? That needs to go. Okay, so that's your 10:45 to closing, and this is how it is. So you can see the market is just moving at those trading hours, and that's basically it in New York. All right, that was like a bit in the middle of nowhere. All right, would you have sold here or bought here? You could have. Why? Because that's where they sold in Asia, right? Asia sells off and then they buy up. So they sold here, it's a trading hour, they sold. They bought, it's a trading hour, you buy, okay? And that's how it is. This is a bit shy of there. You could still have traded it, but you needed to mark the gap there, okay? And didn't quite fill, as you can see, okay? That's the gap there. Nearly, okay? Maybe, yes, a gap fill. So then slides down a little bit, as you can see. All right, so that's how Monday trading hours worked. Tuesday, let's take a look at the Tuesday trading hours. 405, that's your 405, okay, market going to the upside. 9 to 920, that's 9, and that's your 920 on this bar here. You see, this is where they bought. Market comes, slight buying, not a lot. It's in the middle of nowhere actually, because if you follow through Monday, like let's follow through Monday, right? The market is selling there. So the only place you want to really sell is up here if it's a trading hour. And then you got 320, 530. Let's see where 320 is. 320 is there. And then I've got 530. 530 is there. And then I've got 10 past 8. 10 past 8. See, that's like nowhere. Okay, so this is like in the middle of nowhere. See, all of these hours, not really anywhere. Okay, because this is the low, this is the high, and you're like nowhere. So no real trading here. But this is already a sign things are going to the downside. Why? Because if you got technical analysis knowledge, you'll know that, look, we're at a place where the market is bouncing off, okay, but it's not breaking the highs. We're going sideways basically, right? And the more times, like once, twice, 3 times, 4 times, 5 times, this thing is touching it, and then it's just gonna break down, okay? More than 3 touches to a place, it's like, okay, not working out for us, okay? So that broke down on Wednesday. What did I have on Wednesday? I had 9 o'clock. This is 9 o'clock. So market, 15-minute bar stops there, and then the market sells off, as you can see. Where did they sell off? Asia. Okay, so this is like, this isn't even London. London's around here in the morning. Okay, so maybe pre-trade session London is here. Yeah, pre-trade, because this is my 9 o'clock and London's 3 hours behind. So that's 6 o'clock in London. Okay, and this is going to be 7 o'clock London. So by the time it's 8 o'clock in London, they're like selling off. And then the market breaks. Now, once the market breaks, this is Wednesday. What did I say for Wednesday? If there is direction, look, I've got 6:15. From 9 to 6:15, 7:15, if there is direction. And then you got to target the closing. So I've made a comment on there as well. And that's it, Wednesday. As you can see, we're just going into those hours. So there's obviously direction here. Market comes up, goes all the way back into 11 o'clock closing. All right. So even if you were just tackling this in New York, okay, this was like your zone. Impulse sideways, market just breaking down. Even if you entered the breakdown for a quick trade, because you know it's going all the way into 11 o'clock to closing, that's it. And then after closing, you can see the market stop there. So Asia starts buying. Then you got the Thursday trade hours. Okay, Thursday. And look at what's going on Thursday. Trade hour. Trade hour is breakout. Going all the way into the target zone. All the way into the target zone. Wow. So that's the place Thursday. Now, Thursday was a trading day. So the market dips down all the way into New York. Trade hour, New York. And then bounces up a little bit. Okay. Then we've got Friday. You see how it's going back into those trading hours. So yeah, obviously after that big fall, buying is like, hello, do we want to be a buyer? But that's the way it goes. The trading hours is once you got your bias, your direction, you want to follow it to the target. Then you go to the target and then you get out. Okay, if it's going against you, right? Because my bias was long, right? So if the market is falling down strong, especially after you see Wednesday closing below the swing, I'm thinking to myself, okay, there's nothing to do here for me, okay, because it's just against my bias. All right. Should I have changed my bias? Yeah, I should have changed my bias to the downside, but I decided not to do anything because those bars are pretty big. So I said to myself, just let it go, relax. You don't need to do anything there. Okay. So on Friday, let's take a look at the Friday hours. We had 4:30 to 5 o'clock. This is 4:30 there. All right, so market going into, that's your 4:30 to 5 o'clock is here. All right, so the market's going to the upside. This is a place where they sold this. You see the cause for the break. Okay, it's the same level. So the market sells off. What have we got? Then I've got 9 o'clock and 10:30. Where's 9 o'clock? This is 9 o'clock. This is 10:30. Okay, so not a lot of stuff happening here because that's where they sold into 9 to 10:30 zone. And then I've got 12:25, 12:25, 12:25 is there again. It's a bit in the middle of nowhere. All right, and then 4:35. Now 4:35. Whoops. 4:35 is right there, guys. All right, and that's it. Breakdown. Now at 4:35, look at the comment I've done here. I've made a comment, right? I said 4:35 later hours are tricky. It can flow into 10:45 to closing or just stick around in a range. Okay, so I've made that comment. What does that tell you? Well, once you break down, that's it. Where are you going into? 10:45. So where's 10:45? Well, this is your 10:45, ladies and gentlemen. All right, and to closing, and that's your closing. So already knowing that is good. All right, so the market's just breaking down. Beautiful. Again, look at this. Okay, this is only a place on the 15-minute chart. So the market wants to retest the low, stop sweep, and there's no excitement. No excitement. All right, see these stop sweeps? There's just no buying excitement. But it's Friday closing. Let's take a look at the others. Euro dollar. Remember with the euro dollar as well, I had Wednesday or Thursday as a trading day. Okay, that's your Wednesday. All right, so Wednesday, Thursday, look, market comes down. Thursday, market goes up. All right, so this is a straight pullback. Whoops. In fact, think about it for a moment. You have to watch the video. I don't remember what I said for this, but this is a buy zone. So now Thursday, at the end of the Wednesday, we're down, and Thursday is a trade day. So it's back to back 2 days, and then the market going up. And I did say this is a zone we need to close. All right, remember the target zone. So that's how it is. Let's check out the hours to see how that panned out. So we only had Wednesday, Thursday. All the hours are the same, so you can just take a look at that. Wednesday, as you can see, the market sizzled down into closing, right? Because I had a target 9:30, 10:30 closing. So 9:30. This is 9:30. That's when the breakout happens. 10:30 is all the way down there. Okay. And then I had closing, right? That's your closing there. All right. And that's the new day, Thursday. So Thursday, what do we have? 2:35. Okay, so I need 2:35. This is 1 o'clock. 2:35 is right there. And then I had 4:25. Let's see, where are we? 4:25 is there. So nothing really to do here. And then I've got 9:45, 12:50, 9:45. 9:45 is there. 12:50. 12:50 is there. Okay. 2:25. So this is the place where the market is now beginning to push to the upside. Okay, like this is a good push, and now it's just like accumulate, accumulate, bang, breakout. So then we've got 340, right? 340 here. This, you see how the market's pushing up. This is the 340 bar. Why? Because it's a 15-minute chart, right? 340. Possible push. Let's see the comments. Possible push through into 7 o'clock and later 10 o'clock. So 7 o'clock, push into 7, push into 7, push into 7, and later 10 o'clock. And this is your 10 o'clock. All right. And that's exactly the target. Remember, we had that level. I said, guys, we need to close that up. And that's how it is. So trade days going into there. Fine. If you did that, great. Let's take a look at Bitcoin. Now with Bitcoin, trading day was a Friday. So let's see if something happened on Friday. Remember, we want to come into here and then buy on a Friday, right? So the market popped in Thursday, Friday. Today's a Saturday. So what you're looking for is the buy operation here. Okay, so Friday, where we just look, Friday, this is the zone on a Friday. It comes back into your buy zone. Friday, let's check out my hours. All right, so let's see. This is all happening in New York, right? 4:35. This is 4:35. So market dipping down. Later hours are tricky. It can flow into 10:45. 10:45. All right, so this is interesting. Look, this is 10:45 here. Or just stick around in a range. Okay, remember my comments for Friday? Okay, so there you go. Or just stick around in a range. And for this one, it's sticking around in a range. Nice and easy. All right, and then the market goes up. So if you were to trade that today, if you're trading Bitcoin, you've got an advantage now. Why? Because you know what's going on next week. Okay, so you can check out now the week of 23rd to the 27th of March and check out where the trading days are. If you got a Monday, let's say, then you say, okay, let's wait till Monday because we've got place to close here. Let's wait until Monday and then check it out. So then you have a Friday, and if there's a Monday or Tuesday from the lows, you want to go to the upside. Okay. Let's take a look at the indices. Now with the indices, let's do SP 500. As you know, I had a Monday or Tuesday and a Friday, And my bias on these were obviously to the downside, as you know. All right, I've been downside bias on these, except in buy zones. All right, so that's your Monday market going up, Tuesday making a high, Wednesday selling off. Okay, so this is all logical because I did say this should break. Okay, and we are, as you can see, this is a beautiful round top. So we should be nice and easy coming to the downside. Okay, so it's all good. And I did say this is like distribution zone. You can see the market like at the tops, they're just selling off. You see, they're just selling off, selling off, selling off. So all these trading days, you see selling to the downside, selling to the downside from the zone. You see the red zone. So selling on the trading days to the downside was the way to go. And obviously, this is why our bias was to the downside. And I did say, although you could buy on a Monday, you need to make sure once you close gap, remember the gap closure, Tuesday target, that's your closure, right? Remember, whoops. All right, so I said if you're going to buy, you got to target that and then sell back down. So just put your hours in there also for the indices. You'll see they should be fine, okay? And that's basically it. Let's see if we found the Tuesday top. New York, what did I have? 320, 530. So 320. This is 530 there. Okay, so from there, market just fell off. 320 is there. The market breaking into there. Okay, so it's gone, done that target. Okay, that's your Tuesday. On Wednesday, what happened? Let's take a look at Wednesday. Let's get rid of these. I did say if the market comes up into those zones, you can sell off as well. So Wednesday, let's see the hours. 6:15, 7:15, 9 o'clock in the morning. This is 9 o'clock in the morning. Market selling off. And then we're going into 6:15, 7:15. 6:15. That's your 6:15 there, selling off again. 7:15, 4 bars away. 7:15, selling off again. Into 9:30, 10:30 closing. Look, 9:30 market breaking down. 10:30 is there and closing is there. All right. So just, if you got the bias, obviously you want to be selling where you can at the right hour. So just match Thursday, Friday, going to the downside. Obviously you're going to take the short trades there. Okay, so for example, this is Friday. So if you were trading Friday, you'd be taking this pullback to sell off. When would you be doing that? It's like 9, 10:30. Let's see, 9 o'clock. This is your 9 o'clock. All right. 9 o'clock, market's already gone down. This is your 10:30. Again, sell. Okay. You can see you got that zone there. So the market's selling off. And then 12:25. Now at 12:25, market's breaking down. Nice and easy. Then I've got 4:35. Where's 4:35? 4:35. This is your 4:35, ladies and gentlemen. Market again crashing down. And then later hours are tricky. It can flow into 10:45. So it's flown into 10:45, or what did I say? Or it could stick around, go sideways. Okay, so this is your 10:45. And that's it, pretty much on the dot. Okay, so just, if you're trading the other indices or what, doesn't matter what you're trading, just matching the hours, okay, and the pricing to whatever you're trading can really help you out, I think. So this is how the week kind of panned out. In case I was wrong with the bias on the gold, but as you can see, the hours are working out. So your stop losses should be really tight if you're trading with time and price, so you don't have big losses. More often than not, also the trade will cover itself, which is a good thing, because like even if I'm wrong, I know the stop loss is tight and I can move the stop forward when the price is going in my direction. So it really does help, and I can follow to the next hours and see what's going on hour to hour, because we've got the trading hours in advance. Okay, I hope that was helpful. Have a great weekend.